Okay, we are now streaming live. Chair recognizes Madam Clerk. We'll call this meeting, Pension Committee meeting to order.
Yes, sir. Our first item is a presentation of the first quarter ending March 31, 2021 investment reports for the 1945 and 49 pension plans, along with the April 21st update. Ms. Heather Siegler from Morgan Stanley.
Wonderful. Thank you very much for having me, Mayor, Commissioners. I'm excited to give you your first quarter update. Thank you very much for putting that on the screen. If we will just move and we can go to page 2. Thank you very much. I'm kind of going to give you all an update on the market, kind of go through where we were on the first quarter, talk about where we are through April, and then go through the performance numbers. We really kicked off 2021 with continued gains in the S&P 500. That's really that's the 4th consecutive quarter of strong returns, and it's a 1-year anniversary off the March 2020 lows. The equity rallies, if you look on the page here, you can see the S&P 500 rallied 6.2% on the quarter, which was amazing considering we were following a quarter where the S&P was up 12%. So we've really seen a lot of optimism from investors, and they've, you look at what's gone on, and we've had a $1.9 trillion stimulus package that's been passed. We've had a continuation of the rolling out of the vaccine distribution, as well as really robust economic data that's coming in and coming out. We've seen continued improvements in the employment. The numbers I saw through March, the last post, is expected to be at 6% unemployment. Coming through the beginning of the year. So we've started to see that off of those highs of 14.7% that we saw in April of last year. We've seen those continued to come down, and employment numbers are continuing to look better. GDP numbers are improving. And when we look at the GDP through really the first quarter, we're annualizing at a rate of about 4.3%. And the predictions are that the economy, the U.S. economy, should be back to pre-COVID levels by second quarter of this year, and pre-COVID trends by fourth quarter of this year. So we're really starting and continuing to see just a continuation of growth and moving the market forward from an economic standpoint. I will say that it won't be without some bumps in the road. We have seen a really strong market, really leading off of the lows that we had last year in March and April. We expect that will start to see some summer doldrums. We expect with some of the issues we've seen in the supply chain that we could see some bumps. We're starting to see that for the month of May. We've actually had a few negative days for the month of May. So, wouldn't be surprised if we saw a correction in the summertime. We typically have a little bit more volatility and lower numbers in the summer, kind of leading us through. We pick back up in the third quarter, so that's not unexpected. So these numbers look great right now, but we are starting to see, little ticks up of volatility. We also saw, if we'll move to the next page, take a look at the international markets. If you take a look at the very top there, you can see the MSCI EAFE, which is the developed international markets. We're up 3.5 for the quarter. Not quite as strong as we were in the U.S., but they're doing well. And then if you look down towards the middle, underneath that emerging markets, you see the MSCI EM, that's the emerging market index, up 2.34%. And we saw a little tick up in the dollar in the first quarter. So normally the beneficiaries of a lower dollar value are emerging market countries. And if we see the dollar have a little strength, then that's normally a negative for emerging markets. And so that's playing out what we're seeing in the first quarter performance there. The next page will give you a look at the fixed income markets. We did see, this is the first time in 3 quarters that we've seen the bond market actually have a negative rate of return. If you look at the Bloomberg Barclays aggregate index in the quarter, down 3.37%, that's really coming from a tick up in interest rates. If you look at the 10-year closed the quarter right, it's a little bit above 1.7%. And so we're coming off of some really lows towards the end of the year. So as the 10-year goes up, if interest rates go up, then the prices of the bonds go down. And so they have an inverse correlation there. So we're starting to see that. And we saw that in the first quarter of the year. And you'll see that when you look at your bond performance. They did better than the market, but still a negative because of where interest rates are.
Son, I'm on a meeting. Yeah. Okay, thanks.
Any questions on the market overall before we start to look at the portfolio?
No questions.
Okay, thank you. All right, so we'll move on. All right, we'll look at the 1949 plan. You take a look, we started the year at the beginning of 2021 with $74,873,434. We've had positive contributions in so far for the quarter, giving us a net of $558,097 in positive, and then positive investment gain of another $2,119,388, which gives us our quarter end total of $77,550,920. You can see the breakdown on the left-hand side by percentages and by assets. You can see that we had domestic equities of just over 60%. So that having a little bit higher domestic equity exposure was a positive for us for the quarter. We had international exposure of 14.7%, which gave us total equity of 74.7%. We've been intentionally underweight fixed income because of where interest rates are. And we're at 22.6% for our current allocation for fixed income and just over 2.69% in cash. That cash is ready to make those monthly transfers over to pay benefits. Next page. Just gives you a look at the performance by manager. If you look at the large cap value manager for the quarter up 7.86%, 1 year at 43.76%. The 1 year numbers were just amazing to me. We're coming off of those lows, so they seem extremely high. We don't normally annualize at that kind of a rate of return, but coming off a low, that makes sense. At Atlanta, which is your large cap core manager, up 5% for the fiscal year. We have MDT, which is your all cap core manager. So they have all market capitalizations at 4.85%. And then Lazard, which is your developed international manager, up 1.49. And then Thornburg, which is more of your international growth manager, up 3.92%. Next page gives you a look at your fixed income, down 2.79 for the quarter in the fiscal, which gives you a total with the cash that we keep on hand to pay those benefits at 2.96% for the quarter. And so coming in for one quarter, that's right on track of where we'd like to be. Any questions on the 49 plan? This gives you a look at the historical values, cash flow, a transfer in March. So that negative cash flow will pick back up in your next quarter report. You'll start to see that, that negative outflow from that average of 576,000 we're sending out on a monthly basis. All right, here's the update. This is through April, even more positive than we were looking at through March. So currently through the end of April, we are up 6.5% and just over $80,315,433. Good start to the year so far. 1945 plan. Very similar. We started the year at $5,708,518, had positive contribution flow of $99,862, and then investment gain of $100,394, which gave us an ending market value at the end of the quarter of $5,908,774. The breakdown for assets for this is on the left-hand side as well. What you'll notice is we don't have international exposure in this 45 plan because that is not allowed by Georgia code. Only large plans are allowed to have international exposure, and this is considered a small plan by dollar size. And so we had total equity at 54.7%, a little higher on the fixed income here because we're limited in our asset allocation options because it is a small plan, and cash of 3.9%. Next page. You can see for this plan, we had fiscal year, the NFJ, which is your large cap value manager, up 8.1% or 8.09. Your large cap core manager up 4.97%. Your all cap core up 4.8%, which is MDT. Then we had the negative for your fixed income manager down 2.76% because of the larger allocation to fixed income that hurt a little bit more in this plan. Gives you a total return with cash for the quarter of 1.87%. gives you a look at the distribution history. So you can see that, again, that negative cash flow that we're sending out to pay those benefits. It's a very mature plan. And then the April update, we're up 4.8% through the end of April, giving you a total market value of $6,155,794. So we are optimistic for this year. We even though looking at what we do think could be some short-term volatility, we're optimistic at where we end the calendar year at, and still think that we are in that bull market going forward. That we started that out at the end of the recession, and we feel like it's going to move forward. Typically, when you come out of a recession and you enter a bull market, it does last for several years. And so we're hopeful that we're in that same time, even though we are seeing shorter market cycles. We do think longer term, we are optimistic. We'll have bumps in the road, but we should be coming through and have a good positive market for the year. Any questions? I went through that fairly quickly. Give you all the down and dirty details real quick. Okay. Well, thank you very much. That concludes my presentation.
All right, I didn't see any hands. Anyone with questions? I do want to take a moment before we go any further, Heather, and that is to welcome to the pension committee for its first meeting our new administrator, Administrator Odie Donald II. Administrator Donald, would you like to say a few words before we go any further?
Yeah, I'll tell you, very good report. I have had the opportunity, thankfully, to be briefed on, I guess, as a new employee, as well as just learning about the process and our pension plan and obligations from Director Williams, which has been helpful. And so I don't have any public inquiries today. But there are a couple of just process questions that I had that we're scheduled to discuss later. So it's, again, very helpful, and the information that I received and the briefing in advance was quite helpful as well.
Well, I'm always available and happy to meet with you if you'd like to go through any of the details of the pension plan. We do follow the Georgia code, but I'm happy to go through and answer any questions you have.
Thank you.
All right, fantastic. All right, Madam Clerk, our next agenda item.
So we'll just receive it as information, okay, sir, without objection, for the record. Item number 2 is a resolution adopting an amendment made by the Board of Trustees of the Georgia Municipal Association Employees Benefits System, GMABS, to the restated GMABS Defined Benefit Retirement Plan, Master Plan, in the year 2021.
Director.
Ms.
Go ahead.
Zena, yeah, Attorney Zena McLean will speak to this.
Okay.
Okay, good morning. I thought Ms. Donna was going to speak on that this morning, but I didn't see where did you distribute the resolution that I drafted for the board? Is this where I discussed that?
Yes, ma'am.
So before we do that, let me hear from Donna regarding the changes. Again, this is a change that has been discussed and worked through with GMA for some time. Donna?
Yes, sir. This is a routine procedure requiring anytime GMEBS makes any changes, either for IRS compliance or some other, I'm just going to say a routine change that does not individually affect anything that we have done in the plan. We are required to just adopt what the board has adopted for their changes to their master agreement, which would affect all the plans. So this doesn't do anything that changes the benefit levels or anything for our employees that we would. This is a routine procedure that just requires a formal adoption from the governing body.
There was Mr. Mayor, there was a cover letter attached to the agenda item from GMA outlining what Director Williams just stated.
Yes.
Yeah.
The
Thank you,
explanation.
Lena.
Yeah, that, Madam Clerk. I'm tracking that.
Okay.
This is, again, is routine. We've done something similar to this last year as well to the members of the pension committee. So with that, Ms. McLean, I don't know if you need to necessarily step through the resolution in full, but now is your opportunity to speak to the resolution.
Yes, and I was trying to locate that because it was not distributed to you all, but basically the changes actually updates the actuarial factors and interest rates used to calculate the offset for re-retirement. And so the resolution that was drafted, I guess it would have to be presented to the full commission to be approved. And it is rather customary, something that was done last year. And so Ms. Donna basically pretty much said everything that needed to be said on this. And you all have the letter that was distributed from Ms. Gwen Hall. And hopefully you have been able to read that.
Yes. So again, we will adopt the resolution in the pension committee, the voting members of the pension committee. Again, Amendment 3 to the restated GMIB defined benefit plan. Up that, and then we will forward that to the commission for ratification. Just
Move to adopt.
Second.
all right, voting.
Mr. Mayor,
Yes.
Mr. Sias,
Yes, ma'am.
Mr. Donald,
Yes, ma'am.
Mr. Bobby Williams. He's out. Ms. Donna Williams.
Yes.
That motion carries 4-0 with Mr. Bobby Williams out.
Yes, ma'am.
Oh, that motion carries unanimously.
Thank you. Madam Clerk.
That's it for me, sir.
Right.
That concludes our agenda.
There's no additional business before us. The pension committee meeting stands adjourned.